Venture capital is not just about capital, it's about people. A fund's ability to source the best deals, support portfolio companies, and generate outsized returns depends on the team behind it. The most successful VC firms are not just a collection of investors. They are high-functioning teams with complementary skills, deep networks, and shared conviction in their investment strategy. For a first-time fund or an emerging firm, assembling the right team is one of the most critical decisions. LPs don't just evaluate a fund based on its thesis. They look at who is executing it. A great team can compensate for an unproven track record, while a weak or misaligned team can doom even the most promising investment strategy. Building a VC firm is unlike building a traditional company. It requires a unique balance of skills, vision, and long-term alignment. While large, established funds often have clear hierarchies and structured roles, an emerging firm operates more like a startup itself, where agility, trust, and a shared vision are paramount. At the core of every venture capital team are general partners, the individuals who lead the firm, raise the fund, and make final investment decisions. These are the faces of the firm, responsible for building relationships with LPs, negotiating deals, and ultimately shaping the firm's reputation. In many ways, GPs are both investors and entrepreneurs, managing capital while simultaneously building a brand in a competitive industry. But a well-functioning VC firm is more than just its GPs. Surrounding them are a team of investment professionals, operational leaders, and support staff that keep the fund running efficiently. Principals, associates, and analysts play critical roles in sourcing deals, conducting due diligence, and providing the research needed for investment decisions. The best teams are structured to ensure that partners are focused on high-impact decisions, while investment staff handle pipeline management, market analysis, and early-stage diligence. Beyond investment roles, operations, investor relations, and platform functions are becoming increasingly important. Many successful firms today have dedicated platform teams, professionals who focus on supporting portfolio companies with hiring, scaling, business development, and follow-on fundraising. These teams help differentiate a firm by offering real, tangible value to founders beyond just capital. For emerging managers, the challenge is deciding which roles to prioritize first. In a small, first-time fund, the team might consist of just a few partners handling everything. But as the firm scales, structuring the team properly becomes critical to ensuring efficiency and long-term sustainability. A strong VC team isn't just a group of skilled investors. It's a mix of individuals with complementary strengths. The best firms prioritize diversity, not just in backgrounds, but in thought, skills, and networks. One common mistake among emerging funds is building teams that are too similar in their investment approach, industry experience, or connections. While shared vision matters, a team with varied strengths leads to better decision-making. An effective VC team typically includes a former founder who understands scaling a business, a finance professional who ensures structured due diligence, and a connector who specializes in deal sourcing and relationship building. This blend allows firms to assess opportunities from multiple angles and avoid blind spots. Leading firms like Andreessen Horowitz have built extensive platforms to support startups, while others, like Benchmark, operate with a leaner, partner-driven approach. Regardless of structure, a VC firm's success hinges on balancing investment expertise, strategic thinking, and strong leadership. For emerging firms, the first hires are among the most important. Hiring too early can create unnecessary overhead, while waiting too long can bottleneck growth. Most first-time funds start with a lean team, often just the founding partners and a small group of investment professionals. As the fund scales, adding associates, analysts, and operational staff becomes necessary to handle deal flow, portfolio management, and fund administration. However, one of the most critical hires many firms overlook is a strong operations leader, someone to manage the business side of running a venture firm. This includes handling LP relations, reporting, fund compliance, and finance. Many emerging managers focus heavily on investment hires but struggle with back-office management, leading to inefficiencies as the firm grows. Beyond internal hiring, many funds also rely on venture partners, advisors, and industry experts to expand their reach. These individuals may not be full-time team members, but can provide valuable deal flow, sector expertise, or mentorship to portfolio companies. Ultimately, scaling a VC team should be intentional and aligned with the firm's growth trajectory. Expanding too quickly without a clear structure can lead to inefficiencies, while growing too slowly can result in missed opportunities. A venture firm is more than just a single fund, it is a long-term institution. The teams that succeed are those that think beyond fund I and lay the foundation for a multi-decade firm. This means thinking about succession early, ensuring that future leadership is developed internally, and building a brand that attracts top talent, great founders, and high-quality LPs. The best firms are those that build an internal culture of continuous learning, strong relationships, and adaptability. Markets shift, industries evolve, and investment strategies change, but a great team remains the core of any successful fund. In the end, building a high-functioning VC team is about more than just hiring smart people. It is about assembling a group of individuals who can challenge each other, complement each other, and execute together over the long term. Because in venture capital, the right team doesn't just invest in the future, they help create it.